Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. An interesting key reversal up yesterday after the previous session's inverted hammer pattern. However, prices did not approach the mid-November highs or even reach the 50% Fibonacci line of the October 2020 to a March 2022 move at 85.56. However, they did manage to move up through the September 2012 high at 84.24 and the lesser Fibonacci line at 84.40, closing over both. Interesting, the dip was below the February 2013 high at 83.50. and into some free air that stretches down to the January 2021 high at 82.39. But the market did not exploit the move lower, instead choosing to finish with the second highest high since mid-June. Overall, the market is still within the mid-July to late August based bull channel, currently 75.45 to 86.97, though the declining long moving average, currently 86.10, may be influencing the bearish pressure near the upper bull channel line. This loosens the pressure on last week's beautiful looking weekly key reversal up. Finally, the long honeymoon of the rising short medium moving average, currently at 78.52, and the rising medium moving average, currently 78.41, is over. What started on the 18th of November has been consummated into a golden cross. So far today, a lower open, but the market seems to be basing between the September 2012 high at 84.24 and the lesser Fibonacci line at 84.40. It looks like the market may be contemplating an attempt at the 50% overhead Fibonacci line at 85.56, maybe even the long moving average. LME 3-month aluminium. A second indecisive doji cross yesterday, opening closing once again just below the congestion at 25.08, though with a long tail that stretched below. I suppose in its own way it was a continuing sort of follow-on lower to the recent immediate countering bearish dark cloud cover pattern, but again it wasn't in any way an impressive one. It seems that either or maybe both of the following two factors have capped the recent rise and consequently ask a big question over last week's weekly key reversal up. The factors were the recent achievement of target X at 25.60, the primary target for the late August to early November diamond bottom pattern, something I've been harping on about now for quite a while. In addition to the primary target X, we have a secondary harder to achieve target X1, and if the congestion in the way is to be believed, a much harder to achieve target X1 in the 26.52 area. The second factor was the congestion overhead at 25.63, with the aid of the nearby 2021 low at 25.81. But this was just a gateway to a whole band of congestion over here, starting at 25.63, then 25.81, 26.08, 26.22, 26.49, and 26.66. That's the August 2011 high, and then finally 26.75. These last two have additional reinforcement from the declining long moving average, currently 26.58. So far today, well, a tiny test up to the overhead congestion at 25.08. but with a seeming rejection and a move lower, though to be honest it's not that large a move, as there is no real support below until the congestion at 24.41, and the market has seemingly not taken advantage of this for probably the third day now. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.